Okay, hello everyone. It's UNFX, and today I want to quickly make this quick webinar because I've had series of questions on how and what I look at in terms of trading, and I'm going to try as much as possible to bring some people to the light as to what we do here in our academy here, okay, and what the GW masters actually do and how we see trading generally as a whole. Okay. Before we start, I just want to welcome you to this webinar. And if you're here on this webinar, I would really say you are really opportune to have this recording. Okay. A lot of times I have seen traders actually suffer. Okay, go through a lot of period. Okay, in terms of number of years, okay, they put in before they can become successful in trading, some sort. And it really pains me a lot that most times traders come and they put in a lot of effort into trying to do this, okay, but many of the times they'll still come out short. Okay, they come out short many of the times. That is because they fail most times to identify certain principles in the market, all right? And today I'm going to try to show you a bit of all these things and how we do it. We can recap, okay, in some cool manners. Okay, so I'm not going to basically just pick any, I'm just going to do this randomly. And, I can just pick any pay here. All right, so I'm just going to do it randomly. I'm just going to pick any pay and then I'll just do it. Okay, so one of the things we like to see, a bigger range. Okay, we like to take in a bigger range. Okay, so I have identified here that from this point, 2012, okay, 2012 here that we've been in some sort of a trend. Okay, so if you can identify this clearly, you can see that price did come in so strong, rest, drop back one more time. Okay, so basically what I did here would have been to make a resistance here. Okay, so once price could have dropped here, made this huge rise. Okay, it really took a lot of time for price to actually move this high up. All right, it took a lot of time. Okay, but if we had not been around here, so let's say we come into the market, say um this time, okay, this time here, we come into the market this time, okay, what we do basically would be to mark out three areas here, right? Mark out one area. Okay, so we just go down to a line chart. We could just see more clear, much noiseless. Okay, okay, chart. Okay, so we have it here. We have this low, right? So probably took 1.5 years. So this was the whole of 2020, 2012, 2013 to rise. Okay, so this was the whole of this was a retracement. Okay, so which could have caused us to draw our trend line this way. All right, let's just close it up here because definitely this is an uptrend. Okay, impulse, correction, next impulse here, but could not break above the high. So we're looking for the next impulse to break into high. Okay, so we're looking at this at a monthly time frame. Okay, so if you're looking at things in a monthly time frame and you want to go down to a smaller time frame to then find an entry, okay, what we do, low, impulse, correction. This is a high. So this is the high that we'll concern ourselves with in price to try and break, okay? And we look at also candles, okay? So I'm not going to basically talk about the white curve here in this presentation, okay? Even though we also do individual candlestick analysis, okay? And also in our own back home here before taking some certain trades. And we also analyze the month, okay, the monthly candles, also the weekly candles, okay, in terms of how they were formed, what composed of that very candle, okay, reasons why those candles actually moved the way they did. Okay, so we look at certain things in market before taking those actions. Okay, so here we're going to be seeing what happened here. So this was low, higher high, higher low. Okay, so we then look for the next high, okay, which is this high. So we then see the whole of this high credit. So we're here, and we could as well see if this low, okay, right here, would hold, right? So we're just gonna go back to our candles, okay, and we then spotted that here, apart from being a good Fibonacci level from this swing low to this swing high, apart from being a cool Fibonacci level of the 61.8, because we look at certain levels, okay, in terms of retracement, okay, retracement, apart from this level being a good Fibonacci level, okay, of 61.8 retracement, we could also see that this candle alone is an exhaustion candle. Okay, so let's just go down to a weekly time frame to be able to see if clearly this trend actually showed us or give us an indication for a reversal that we would have been bold enough to take a trade off that zone. All right, so let's just go down there. We just put this square to be able to identify those zones on a lower time zone. All right, just go down there. All right, okay. So here, what happened here is that during the time price was then falling here, dropped. But if we could identify here, what we did see here was this filling candle here, right over here. Right over here, as the market was dropping, gave us an entry. Okay, so it also did come up here. Many of the times I speak to a lot of traders, and week in, week out. Okay, so I basically know what they feel, okay, and how it feels to lose money, okay, how it feels to not make anything up before it's market. It's it's painful, okay, it's painful, and it hurts a lot, okay, it hurts a lot to come in every week and then not be able to make money off the first market. It believe is a very big problem, okay, and most traders actually don't understand, okay. So what we did basically when we actually saw this filling candle here, because this actually happened here, and we clearly saw that price was in some bit of a downturn, like price coming down here with such great power, okay. But in here, we could see that in here, if we did take a Fibonacci from swing low to swing high, we saw that this area was only the 50% Fibonacci level, and definitely the 61.8 Fibonacci level was just down here. Okay, so here, if we go down to back to a monthly time frame, we would also identify that this was the monthly candle that formed, okay, that had, okay, this failing candle on the weekly. Okay, so this very candle here on the weekly, this was how the monthly candle failed. Okay, so is there any signs of bullishness from this candle, or a reversal from a downtrend such as this, or a confirmation for the push to the upside? Okay, so when we looked at this candle here, okay, we knew that one, if we are taking this, let's just adjust a little bit. This here was an inverse filling candle. Okay, so it was actually an inverse, okay, filling candle, because sometimes we look at this sort of candle here for next candle to try and fill the week, and the next candle did try and come in to fill this week. Okay, so we could just basically draw a line here, all right, as to where we have support, okay, but we noticed that this support turned into a small range bound from a monthly perspective, and also in a weekly perspective it forms a little range bound movement. So here we saw from a weekly perspective that we had this drop one, push up, next drop, push up. What do you expect is a retest of the zone, is a retest of the zone, guys. And if we notice that the next time we had that retest, we could see clearly how price then broke below this previous structure, bearish, came back, did all the stealing. But what I was looking at for this very candle here was to feel right up here, then back into the zone, taking out this high, but those did not happen. The next candle rushed to be the weekly time frame, rushed to be a bullish, a very strong up back candle. Okay, if you look at this from this bar, okay, so we saw that the next candle was so much in a hurry. Okay, it was so much in a hurry. Reversal patterns or reversal bars are not so much in a hurry. If they're so much in a hurry, the next candle on weekly time frame should confirm it. If it's so much in a hurry to leave the premise, okay, what I expected to see was a candle that would close low over here. But for this hurriness and close up here, the next candle should try and be bearish to at least fill into testing this previous area. Okay, so we never had a reversal here. So if we looked at this candle and the month indeed ended, the next month ended bearish. So what we're looking for the next month, okay, this very month here, to make another push to the upside, try and break in this point, okay. So we had to wait for the next candle to try and give us an indication of a bullish structure. Next candle came, pierced down here. Wow. Okay. So on a daily perspective, okay, on the daily, let's make this a little bit bold. All right. Let's make this bold and a little bit sharp. All right. So here was the next month which we spoke about, and we saw that on Monday, let's be down to the H4. Okay. Just to be able to see that the structure back inside there. Wow, I'm not sure I'm going to see that. But it's daily. Okay. So here, the next month formed here. After this huge month here, next month formed Monday, the daily. Monday candle dropped, indecision, support down here. Tuesday candle dropped, okay, indecision. So I'm looking for a Wednesday candle to form a reversal pattern of some sort around this support. But then Tuesday came, we saw what? Break above. Looking for a pullback to test. Price then continue to fall and fall. All right. Now I knew automatically that this was a structure in the market. Okay, so this indecision candle turned out to be a structure, and we could see how the whole of the month came back, respected the structure here, and then further made drops. Okay, And that was how we waited for more than 1 month, 2 months, 3 months to be able to get in a trade on the Euro card. Okay, so how did we get in? Looking at from a perspective, when all happened, okay, I like to point out to students that many times you need confirmation. So for this weekly candle here that formed a filling candle, okay, price will not just pay, pay 1,000 pips in a day, 10,000 pips in a day. No, it won't do that. So there is always time, as a patient trader, there's always time to capture, okay, there is a great probability, okay, to capture 70% of a move, okay, 70% of a move, 70% out of 100% of the time than to capture 100% of a move, okay, right from the low, because many traders have this mistake of trying to enter the market right from the very low. Okay, trying to catch the bottom from top. We don't try to do that in the market, all right? We just try to see, okay, some structures and then align with our own strategy, our own days of the week, okay, when, time, because definitely that times we don't take a trade, possibly on Monday, we don't basically take trades on Mondays. Okay, so we align them to our trading principles, okay, in terms of our rules which we have in the market, and then we look at structures, okay, and we try to mix up everything, okay. So definitely everything you want to see in the chart, okay, it's right there in front of you, just for you to plug and play. Okay, so apart from looking at the CO2 report, I just can sometimes look at the chart and basically and then make the decisions I want to be taking. Okay. So I look at several macros, I look at several micro macros in terms of a longer term. Okay, so that really helps me trying to identify where I am, okay, where I want to be next, okay, where I want to go next. Okay, so and I we just basically looked at everything. Okay, so when this month candle ended here, I knew that this was the big thing. Okay, this is exhaustion doji. So the difference here in this very candle here, difference here is that this exhaustion happened around the 61.8 Fibonacci level here. Okay, so you need to many times stack up indications, okay, stack up reasons, okay, to take a trade, okay, to take that trade, okay. So here when we saw this doji, all right, and we just basically didn't have this trend line here. Okay, we didn't have this trend line here, so what we did was to try and form this trend line now. Okay, so this doji here assisted us in trying to form this trend line using our line chart. Okay, so we just put it up like this. Okay, so that really helped us start forming this trend line, and we go down to a weekly time frame to see the composition of that line chart. Okay, and this couldn't get a trade for us. Okay, so we just go down to the daily to see when the new month started and everything. How it really came in. So the whole of that initial candle was this, returned to close here, and the whole of this was weak on the monthly. The whole of this was weak on the monthly. Okay, so while this was the body of the candle, so formed that indecision candle here with a very long wick down here. So what do you want to see? You want to see a structure confirming that the end has finally come. All right. Now the next week comes, the next month comes, okay? We want to say confirmation of the next month, okay? All right. Next month structure starting to form here, okay? Previous support, indecision candle here. So basically, we could have just tried and thread this little range here, okay? This little range here, just try and thread this little range here, low, always buy at the low. Support help, support help, support help, buy at the low. Okay, so we did have this little range here, down here, just if you get this point here. We had this little range here. So what do we need? We need a breakout. We need a breakout of the range, retest, continue. Okay. So basically, whole of here turns support for that month and closed bullish. All right, let's go down there. Weekly perspective, support here held. Monthly, we could see that on a monthly perspective, things were not really clear for the very first month. Okay, so we just take this off. We see that the very first month came in at an indecision as well. Okay, but definitely you want to stack up more confirmation because definitely here it's not just good enough. Okay, let's just quickly get this up one more time. It's not good enough. So what we do as traders from a monthly perspective, we know that this is the block. Okay, the block is down here. So we just quickly leave the week and then target the block. Okay, look for weekly confirmations from the block. Okay, so we just go down to weekly back, weekly. So we identify that we have come to see a weekly support around the monthly block. So just quickly not go back to the monthly anytime soon to see what's happening because we are already in the month. Okay, we'll just identify this support here from the block. Here, support from weekly perspective because price did honor that zone. So price did honor the zone here. Support indecision. Try and make a move but couldn't break this structure. Came back as support daily. Daily also support, breakout. So this was what we waited whole of the month for, this breakout. So we want to be confirming a retest. So we had this support here, resistance, turn support. Price came back, stayed the whole of the month. Okay. Part of the month, no cool decision, but from the daily, we had the support here on the daily. Okay. So why did price not leave this premises immediately? Why did it stay here quite some time, the daily? But on the weekly, if you look at the weekly, you would identify that here, breakout, filling, this week here should have been filled in a hurry by this next candle. Should have been filled up to the T, but couldn't. Definitely, what this means that price has started to contract, but it's in a bullish setup, but it is contracting on a near term. Okay, so we just go down to the daily, okay, and we notice that price was indeed contracting. Okay, we just quickly draw lines of the contraction there, and we could see what happened afterward that contraction. Okay, whoa, I think I just get over my lines. Okay, so price started to contract of some sort. Okay, here, so what do we need? a breakout. This came in with a huge bullish engulfing candle. Month closed. The next month, bullish engulfing candle formed, and we just hopped in on the trade here. Put in a trade here, and you can see that from that point, our risk would be somewhere down here because it has taken away everything in the market. Somewhere down here with 216 pips, and if you can hold this trade for 2 months consistently, that would be a 1,434 pips in 2 months. Many times traders come into the market to try and make, short-term profit, which is also good, but also bad in the market setup. Okay. And without looking at certain things, in terms of the macro, okay, because here was when everything happened. Price then made this move, breaking this high retracement. So if this is 61.8 Fibonacci level, we would then look to target the 127 Fibonacci extension, okay, which is this area here, around here. So this would help anyone to identify that the next impulsive move would be to the upside. So whatever happening here is a pullback. Next impulsive move came in, boom, tested the 1.60. Okay, which is 1.60, 5.60. So it took probably a year to move from this low to this high. Okay. So now I feel like I'm having positions. I don't like bringing up old charts. May not be as we looked at possibly what has already gone. Okay, so we're going to look at some cool new charts now in terms of the Euro card to see what we have with the Euro card from a monthly perspective, a weekly perspective, a daily perspective, and also when we take our trade from the H4. This price consolidated here for 2 years, right from 2018, 2019, okay, came in, break out, all right, you see guys, support here, broke out, this huge candle, move, retracement to continue next impulse to the upside, okay. So this is a monthly support here, support here, support here, support here. So technically, what we'll be doing for our next structure will be to look at the monthly block here. The monthly block here. And that'll be cool to see about that monthly block here. So this is how we're going to approach this pay, and for certain reasons why I want to do that, monthly block here. This was previous structure on the monthly in terms of week, so this will turn into weekly support. Okay, so here we're looking at price right around here. So, but now we are starting to have what looks like a bullish structure here, right? But that's not enough. That's not enough to believe that price would then just rally to hit. Huge impulse correction, okay, expect the next impulse. So, but basically, you would want to see the monthly candles, okay? Because definitely what happened here for last month, that this candle was bigger than what we expected it to be. It was quite bigger. Okay, so if you had a really shorter candle, say short candle week here, would have looked at the low, just start buying up like that, after this huge move. Okay, so here we have a monthly candle here, current month still in here. So from weekly perspective, we have started to see what look like a support in here, support here. So this is the only time we want to go long looking at the weekly perspective. So the daily, we have this range here. Also similar to what we spoke about before, daily, we had this, but we have not yet seen a break of this structure. All right. Price came in, huge, tested, went back. We've not seen a break of this structure. And today is already Thursday. Okay, so we will not be looking to see anything or trade anything on Thursday. We'll just look at this support here for next week and how everything will fare in terms of next week. Looking at the market, looking at the dates, okay, in terms of how the month is going to end, and just make this decision. So, if we're looking at it from a weekly perspective, we have seen that so far. Let this come up on the weekly. So far, if we look at the half body structure, this is the whole body, which is about 166 pips. So half body will be 83, which is okay. So it's probably could look at a half body combination in terms of strategy entry. Which is also with the student, we look at this. So we can look at the half body entry here, but this was a huge, also huge support. So we can look at for next week how next is going to play. But definitely we wanted to see his capitalization coming into the market and price coming back to hit this zone one more time and also this zone. So possibly we look at the Friday drop, Monday. So you can have a hurried break above on a Monday. I think that would be a nice time to actually look for this long trade. But definitely what I want to see from a real perspective, I want to see a drop back into testing this zone. You can have additional candle here, closing in this form. Okay, right, quite long at this form. Okay, this is the weekly. I think I would really like to see the buy side of price met rally, then drop one more time, take a front rally to testing this support one more time. I think I want to be seeing that. Then I would like to be able to position on the multi-time frame to go to know when to actually play that entry. All right, so this is how we approach trading as a whole. Okay, we like to take our time in terms of how we come into the trade. We look at certain things. So definitely from here on, we spoke about this for yesterday that we gave out a sell signal here that we can actually start looking for those sell opportunities right from here, and our stop loss should up here. So looking at price dropping back into this zone, so that'll be 83, 85 pips. And risk will be somewhere around the 31 pips. So that'll be 162.5 risk reward trade, and it's a good position to be. Okay, so we've done this by looking at different time frames, okay, how everything's pushing different time frames, and that really helps us to be able to understand what the market is doing at any point in time. So if this is a failed rally, okay, this is a failed rally, okay, some sort of bearish flag, can actually have that drop coming to the market, and then we could see this zone being tested and fall to this zone being tested probably. So you can look at all the swings in the market, how we would then look to react as regards how everything is going in the market. But looking at a monthly perspective, we are still at an indecision zone. Okay, so far so good on the month. We've seen monthly change, not really significant, so we can actually come in to wait for some bearishness in the month. Okay, actually drop here without force is to go on to negative, and we can look at some setups. And this can actually form low of the month. Okay, this can be low of the month. It's not really a problem. Okay, but definitely want to see breakout. Okay, for the month, the candle closing high above here. So this is a very huge support here, which we have seen from a daily perspective. And we want to see price come back to test this structure one more time, confirming this structure on a daily time frame. Maybe next week Monday, but definitely we can expect to see price drop for that time to testing this structure. So huge support daily support, but on a weekly perspective, you're looking at support in here, right around here. Okay, so that's how we approach trading. Okay, we just look at some short term, um, um, you know, threats, like that. Just look at this kind of shit. We don't really come down to 30 minutes to see what happens in 30 minutes. We just basically take trace of the H1 and also the H4. So here a new day, daily ATR 89 pips. All right, daily ATR 89 pips. So you can actually look to 70 pips. So for a new day, assuming one did not take a trade entry here, right around here. So looking at this, I think you need some pullback of some sort. Okay, some pullback of some sort way back into the structure. You can put up a pending sell order here, and let's see, our risk could be somewhere around the 1.5624. Let's just make this a little bit here. 563, and take profit will be around somewhere 1.5520. Okay, so let's just see what risk to what credit would be. All right, hit that with 0.01 lot size. This would be okay, $2, and that would be $6. So 163, that's cool. That's really awesome. And if you look at this technically, we would say that it's really a nice position to be, because looking at up here, down here, and also on the weekly, we could see that possibly this could also earn as institution candle. So on Friday, we don't basically know what will happen, but if this is 8 and this institution candle, then on Monday can actually come back into testing this high before then to drop again. So we need to be very careful when we take up this trade, because we expect this for price to actually make a push up and drop, but this is going to form like a decent candle. So we then look at this on a weekly time frame as a wrong trade. On the daily could be a good trade, but the monthly and the weekly could be a wrong trade. So definitely, I think it's a bad position, a bad trade to take if one did not really take a trade off this high around this point, and then your risk would have been somewhere above here, okay, above here, and the reward could have been somewhere above here. So looking at it on a Friday, well, I think it's a possibility, but we don't want to see situation where by Monday this comes in and then it just takes you all away. So definitely this was a good position to take a trade, and this would have been risk $3, and profit would have been $7. So that's more of 1:2.3 is the reward trade. That would have been a very awesome area to actually take that trade, and not here. So we can actually put a pending order that if price could actually come up here, okay, on Friday, some sort that you can expect on Friday, come up here, then try to go back again till Monday next week to actually come into feeding this order. So we like to take a trade with a good risk reward, and constantly taking such trades will actually put you on the right track to profit. All right, so here the daily, so we've seen that daily we've had support down here and resistance far here, so we can not just take that stupid straight, because definitely this can actually move further up into testing yesterday's high, which is Thursday, before then try to drop back down. So I think that would be nice if you have to start looking for the straight short opportunity, and it could really, really be nice spot. Okay. So sometimes you need to allow trades to actually go. Okay, you don't need to force yourself into taking some trades. Just walk off trades. Okay, you're not really forcing yourself to actually take those trades. Okay, allow trades to go sometimes. It really help in decision making. Just like similar situations which I speak about with the GBP JPY. Okay, why I think it's wrong to take any trade of this currency. Okay, so far we have a drop of the 4.0% in the week. Okay, so having further drops, I think that will be a very huge gamble. Looking at here, we had this huge support down here from a monthly perspective, and looking at the weekly time frame, we have this also huge support here or hidden structure in the market somewhere down here. So that is also a very serious issue to look at. Okay, monthly perspective down here. When look at the daily also, daily, when I spoke about this trend, okay, I said this this is wrong. Okay, this is wrong. Okay, this combination is wrong. Fill in followed by indecision candle. This is wrong. Okay, so what is happening here basically on the shorter term is a range bound. Okay, this is wrong. So definitely fill in, fill indecision candle, fill indecision candle, indecision candle. This is a failed rally here. So I look at this as a failed rally on the longest in daily failed. So I'm sort of ace curve. Okay. I will just make a video on the ace curve. Okay. Be it bullish or bearish. Okay. Ace curve. Okay. This is a bearish ace curve. So here the bearish ace curve. Okay. And there's there's a lot of things in the market. So looking at it from a daily perspective, I think the best area to start looking for those trades it's somewhere around the block. Okay, so looking around the block, we'll just look at how price would then trade inside of here. Okay, so around here. Just look at here. All right, look at here. So around the block with the H4 there. You can see just go down to the H4 and see when it's suitable to come into the trade here. So coming into a trade or taking a trade around here will provide us with a certain level of risk. Okay, here we have this candle here. It's weak here, so I expect the next candle to try and come and to try and feel whatever happened there before then trying to drop up and fall back into here. So that could take quite some time. But definitely taking this kind of trade around this zone and risk would be somewhere here. Look at what's gonna be like. 0 point. Let's put up the risk somewhere around the 136.55, and the profit would be somewhere around 134.69. That should be cool. We don't want to catch up to the low. So looking at making 1,200 $1,200 and then risking 373. So that's 1 to 4 weeks to watch. I think that's a good trade to actually take, and it's really wonderful. It's really cool. Okay, so we just put that pending order here, and then risk up here, then reward down here. If it does come to hit our stop loss, I think that'll be a good trade. Okay, like you said, such trade because definitely on longer term be profitable. So I can actually have a win ratio of 1:3 win ratio. Okay, and I'll still be break even trader. All right, so that'll be all for today. If you want to learn more, you can actually hop up to GW Trading, okay, on our Telegram group and actually click on how you can actually get the education. It's really cool to know all these things and when to avoid certain things in the market. All right, so we are not always right in the market, but we look at trading as also a big probability game and look at the possibilities. Also looking at the ATR in terms of price over and also the difference. We don't just trade randomly. We like to trade in the short smart money because that's how we're going to make money. Okay. So see you. I love you all. You're blessed.